Good evening and welcome back to the channel. In tonight's video we are going to talk about gold and silver. Gold and silver have been on a crazy rally over the last few months. Silver up over 100% this year so far. We're going to talk about what's driving this performance, why we still see gold as a massive part of anyone's portfolio, why we think silver's gains could go even more parabolic in 2026, and why silver has only just begun its rally past all-time highs. If you're new to the channel, drop a like, subscribe, and we will go through some very important topics tonight that are driving the performance of these precious metals. So to start, let's have a look at the price chart of both. So as we can see, gold just down from the all-time high it set a few weeks ago. Gold down a few percent, so we are now down, 4% from all-time high of $4,385. That massive gold move really kick-started in the middle of this year and really driven by central banks around the world. We've saw central banks buying up tons and tons of gold as the massive debasement of fiat currency continues. But what's more impressive is if you actually look back at gold's rally, it's pretty much been on a tear since back in March 2024. If you remember, March 2024 was when we saw a regional bank crisis in the US, and that kicked off a massive run on gold. If we go even further back, you can see that gold doesn't normally move the way it's been moving recently. We've had some nice big rallies in the past, normally caused by some financial chaos. So this was the response to 2008, the global financial crisis, which sparked massive money printing, massive debasement of dollars as we got the bailout for the banks. We also saw European and the UK banks do the same. We then got a rally in 2018 into kind of the COVID period, the stimulus period, and then we got this bounce here in 2022. This here, in my opinion, was largely a response to the Russia-Ukraine war, which we'll get into in the next wee while. If we look at silver, you can see silver's just been straight up for the past kind of 10 months, really. If we go back to May, so 7 months ago, you can see we're up 82%, but really the rally started back here in January, and since then we are up over 100%. 12-month candle, the yearly candle, looks like it's going to close up 100%, which would be a huge move. Silver, $1.5 trillion asset, 100% move in 12 months. Precious metals aren't meant to move like this. Gold, silver, they don't normally move in such a violent way. That tells you that something big is happening behind the scenes, something big is happening in the global financial system. And we'll talk a bit more about that later as well. One of the interesting things is the gold to silver ratio. So as you can see, pretty much traded sideways since 2016. But at the peak in 2011, when we saw silver put in its previous all-time high, the ratio was just 30. So 30 ounces of silver bought you 1 ounce of gold. Right now that's up at 72. So kind of spoiler alert for what's coming later, but I think silver still has a long way to go to catch up with gold. Now, a lot of people are asking, where can gold go and where can silver go? For me, I think the biggest challenge is how much money are they going to print over the next 12 months. We've got rate cuts around the world right now. We've got the US Fed going to cut rates. The UK are going to continue cutting rates. We've got Switzerland down at 0%, and we have massive stimulus coming out of China. So in that regard, the value of what gold is measured against is going to continue to drop. So I think gold is actually pricing in something bigger than anyone is anticipating. I think gold is pricing in almost like a revaluation of the currency, a revaluation of the debt. And for that reason, I think gold goes beyond $5,000 over the next probably couple of years. I think $10,000 an ounce of gold in the next 10 years is more than realistic, as governments around the world respond to AI, they respond to kind of the social crisis, the debt levels. They're going to have to print trillions and trillions of dollars, pounds, euro, yen, whatever it is, and that's going to cause the value of gold to rise. But let's look at a couple of what other people say. We'll talk about some of the big stories around gold and one of the reasons why we're so bullish on metals long term. So if we look at this tweet here, this is from Lisa Abramovich. She shows that global central bank holdings of gold have absolutely skyrocketed since 2010. But you can see it was kind of leveled off. It was pretty level through 2010 until 2022. Around 2022, that is when we started to see these massive spikes in buying of gold by the world's central banks, predominantly in the East. So predominantly China have been scooping up tons of gold month after month. Now, one of the biggest reasons for this is previously China, Japan, the UK, Europe, they would hold a lot of their treasury would be held in US bonds, US treasuries. They would hold a lot of them on their balance sheet. Two things happened. One, to everyone in the world, it became clear that the US was in a bit of a debt crisis itself, and the only way to fix that was going to be money printing. The US is going to have to continue to print to fill its deficit. The US government operates in a $2 trillion deficit, and I don't see that evaporating anytime soon. We saw Elon and Doge was unsuccessful in filling that gap. So governments around the world woke up to the fact that there's going to be devaluation of the dollar forever. So if you're holding dollar-denominated treasuries, which most central banks were, you're constantly getting destroyed by inflation. So we can see the amount of gold buying has risen dramatically in that time. But what also happened was Russia-Ukraine kicked off at the start of 2022, and the US, Europe, and the UK seized foreign assets held by Russia. So they held currency, they held foreign treasuries, and they held them in these UK, Europe, and American banks. They all teamed up, they froze their assets, and to anyone around the world, that sent massive warning signals. That meant that no matter what happened, you could be basically in the bad books with America, and you would have your reserves frozen. That means you don't have them to access. I don't think they'll ever get them back. And that just caused a lot of distrust around the world. And because of that, central banks moved to hold a neutral asset, a hard asset that can't be debased, can't be inflated, and more importantly, cannot be seized. The other thing that happened right then, I think I've got it here, but here's to show some of the numbers of central bank buying of gold. Massive amounts, 53 trillion in October, 36% higher than September, and the largest monthly buy year to date. And that's why in October we saw gold resume its uptrend after selling off a bit in September. For me, I think $10,000 an ounce of gold, easily achievable. I think the biggest thing about gold isn't necessarily the percentage gains, but it's the fact that you're getting percentage gains and you're not being destroyed by inflation. People talk about yield a lot of the time. So people talk about yield on property, for example. They might earn 8% a year on their property. But when you factor in that inflation's really somewhere between 6 and 10%, you're not actually realizing that yield in real money terms, because inflation's destroying that yield. When we think of gold, people look down its nose because it doesn't normally move as violently as it does just now. But what it does do is it protects you against inflation. So for me, I don't think that's going to go away. I think AI is going to accelerate the adoption of gold and metals. And I think overall it's just going to be bullish for gold and silver long term. All right, let's have a look at the silver chart, because the silver chart is just insane. We are up at $58. If we zoom out, you can see how big a move that is. The previous all-time high sat at $49.86. So a huge move for silver, trying to catch up with gold, but a long way away, as we showed with the ratio between gold and silver. I should say, anyone in the chat, if you want to drop any questions, get our opinion on gold or silver, any questions related to either, drop them in the chat and we will get to them as we go through. So silver's an interesting one for me. I've been stacking silver for a couple of years now. I think the last time I bought is marked on the chart. Yeah, it's down here. So that was just May 2024, so less than 2 years ago. And since then, we are up 110% since then. So huge move. Again, buying gold and silver for me is not necessarily about the percentage gains, although I do know that it's going to rise in value. It's more about protecting yourself from inflation. It's a nice investment to hold. I've got physical, got some here, some coins, got some bars. I keep them here as well. But I think the nice thing is you can pass them on to people. They're a nice gift. But also, I think for me, I think silver has huge upside potential, and I kind of see it as the more volatile play to precious metals. I think gold is a bit more slow and steady. I think silver, when it gets going, is going to explode higher. And I think this breakout is actually just the beginning for silver. I don't believe that we are anywhere near top for silver. Let's. I've got a few articles to share, and then I want to cover one important thing when you are buying silver as well. Gold and Silver HQ, probably a bit biased. They show this cup and handle pattern. Now this dates back to 1979. They're showing that it's broke out, and the target of this move would be $700 an ounce of silver. Now the one caveat to this is this cup and handle dates back to the 70s, so that means that this isn't likely to play out anytime soon. It's more likely that this is going to take maybe 20 years to play out, but I do think long term the idea is silver is going higher, and there is nothing anyone can do to stop it. If we look at the short squeeze, so this is a really important thing when you think about silver. There's a lot of paper silver that's been trading, and that's kind of suppressed price over the years. So most people have been buying claims on silver, so ETFs or just paper silver that they don't ever take delivery of the physical. Well, over the last 6 months, we've saw a massive demand for physical silver. That's caused huge premiums, but it's also caused massive demand shock, and there's not enough supply to facilitate that demand. There's a lot of rumours that the vaults don't actually hold the amount of silver they say they do, and there's potentially more paper in circulation, claims on silver, than the silver exists. Because of this, we've saw that there's a deficit of silver. The shortfall is projected at over 149 million ounces, and we've also saw the futures market actually trade below spot, and that basically just means that demand for physical is rising ahead of people that want paper silver. Because of that, it's going to cause a massive short squeeze, and I think we're only in the beginning of it. I think $75, maybe $100 in the next 12 months is more than achievable. That would take silver up to over $2.5 trillion market cap, and at that point, I think you start to see the ratio between gold and silver drop. Here we can see why this is happening. So one, you've got investors that want to hedge against inflation. You've got the industrial uses for silver are massive. AI, robotics, EVs, power, solar, all these things use silver in massive quantities. And that's why we're also seeing the demand for physical silver, because people need the physical silver to build out the products that they're building. Because of this, we are seeing huge demand for silver. It continues to grow. You can see here some of the crazy numbers. 48% of total demand is industrial right now, which just shows, and that was back in 2023. So it's only going to grow from there. And I do think as the power build out, the AI data centers, solar power gets expanded, and then we've got a huge move into EVs that I think will continue in the next couple of years, then I do think that we are going to see an even bigger demand on silver supply. And as you can see, this was one of the worst timed articles ever. This was mining.com, lower silver demand and higher supply to reduce global deficit in 2025. Well, this was April. They released this article, and as you can see, silver sold off, and that was the year's bottom. So it was the lowest price of the year on the 3rd of April. Great timing by this article, and as usual, it just shows you that a lot of these articles are placed just to kind of shake people out of their position, shake people out of their holdings, maybe sell because they think the market's going to turn. But then you've got this one, silver demand surge 50% of global production, and that was in August. So crazy moves in the market. Let's jump out the chat. Let's see who's all in, and we will also talk about where I think silver can get to and why I'm so bullish on silver. Shiv's in, not seen Shiv in a couple of weeks. Certified Money, yeah, we are going to be bringing more broader topics as well as crypto. We are going to cover metals, stocks, and just everything financial as we help people understand the markets and the economy a bit more over the next few months. Mike says, is gold likely to have a bit of a short-term pullback in the coming months? Potentially. So I think the hard thing with gold is, has it already front-ran the massive money printing coming? I think we could see a bit of a cool-off, but I don't think we're there yet. I think there's a real possibility that the US and China get together in April, and Trump's going to China in April. I think there's a real possibility that off the back of that, we see a reevaluation of gold. The US still values its gold in Fort Knox at $42 an ounce. If they were to revalue that at, say, $10,000 an ounce, they'd be able to buy back the majority of their outstanding $37 trillion worth of debt. So, because of that, it would reset debt levels globally if they just revalued gold. It's a massive scam, and anyone that holds dollar or pound or yen or yuan money in the bank would get destroyed overnight. But it would be kind of like the global reset that I think everyone needs. Whether you're young and you can't afford stuff, whether you're a government that has too much debt and they can't fix their deficits, the world looks like it's steamrolling towards a global reset, and I think gold is at the heart of that. So there is a real possibility we get a revaluation of gold. So yeah, potentially we get a bit of a pullback, but then the revaluation of gold will send gold to, I would say they'll go crazy and they'll pick something like $10,000 an ounce, because that fixes a big part of their deficits and debt levels. So short term, potentially. I think when you're buying gold or silver, though, you just have to have a time horizon of like 20 years. It should be something for handing over to your kids or your grandkids. It's not something that you're going to trade day to day, especially physical, because one, it's really hard to sell, and two, you have to be mindful of the premiums you pay when you actually buy them. I'll show you what I mean in a second. Lewis from Glasgow says it seems like a no-brainer to hold a significant percentage of crypto gains in metals rather than holding cash. 100%. Cash ultimately is trash. Cash is going to get debased at between 8 and 10% over the next 10 years. That is not me saying that just because I, want it to so that crypto goes up or anything like that. But like, if you look at this is let me take some of these lines off. I wonder if we can share it like this. You can see this is the US money supply chart. It is up and to the right. Every time this goes up, the value of your dollars goes down. And this isn't unique to the US. The UK is doing the exact same. So ultimately, they're going to continue to inflate the supply of currency, and that's going to be a disaster for your holdings of savings. So yeah, I think holding gold and silver makes sense. I think there is challenges with that in terms of how do you liquidate it if you need access to cash quickly. I know for example, I've got these silver coins here. I don't know if you can see them. But if I was trying to sell them, you need to post them off. They give you a valuation. It won't be anything close to what you think. So I think liquidating silver and gold does have its challenges. So I think there is a balance. There is some digital versions of gold out there. But yeah, it just protects your wealth long term. And like I say, it's a nice keepsake. It's something that you can hand over to the next generation. And I think that's probably where the benefits lie. Shiv says, will AI use and need copper more than silver? So there's two sides to it. So AI, AI needs a lot of power, but it also needs a lot of components, GPUs, data centers, all things like that. There's a lot of silver in solar panels. There's a lot of silver in a lot of the components of computers. There's a lot of silver in EVs. So there will be a lot of silver demand. There will be a massive copper demand because electricity uses copper lines to transmit through, and the world needs probably 3 times as much power as it currently has in order to power these massive AI systems. We'll maybe cover AI in a separate video because I've got a lot of thoughts on AI. I use it day in, day out. To me, it's not a bubble. But what I would say is copper will definitely have a massive surge. The difference with copper, and I'm no expert on copper, but I think the difference is it's a bit easier to get hold of than silver. I might be wrong in saying that. But the other side is they'll both do well because of the AI trade. They're both needed in massive quantities. I think the US has to double its power grid over the next 5 years to keep up. That's going to need a lot of silver and copper. But I think solar power is going to be a massive producer of that energy. We see Elon Musk talking about solar all the time. So that's why I think silver demand industrially is going to continue to rise. Some good questions coming in though. So Lewis says, any word from the Swissborg team and adding silver to the app? So there's a reason why, I say a reason. One of the challenges with silver, so to be fair, I've been banging on about a digital silver product for ages. There is talk of a couple coming. I know there's one that I've spoke to the team about. So there is a digital silver product coming very soon by a team that I know, but it's not through Swissborg and it won't be on the Swissborg app. And the reason for that is because it's not MiCA compliant. Now, there's a few challenges with buying silver and tokenized silver, and the biggest challenge is this here. So when you buy any silver product in the UK or Europe, it's subject to VAT. Gold isn't. So when you look at, for example, if we look at the silver price on a chart, you can see it's 58.36. If you were to buy this silver bar here, that price actually works out at $84 an ounce. You pay an almost $30 an ounce premium versus spot, and that's globally. So I think Switzerland's a bit more expensive, I think Dubai's a bit cheaper, but ultimately, whether you're in the UK, Europe, Switzerland, Dubai, wherever you are, you pay a premium versus spot. This price here is a bit of an illusion. No one in the world can buy silver at $58.37 unless you're like JP Morgan. So the problem with that is when you buy you need massive upside in order to realize profit before you can sell. But that also has challenges, and that's why very few people have made a tokenized silver, because you can't peg it to spot, because you can't get hold of spot prices. So that makes it really challenging. I hope that makes sense. But I do have, I'll maybe share it once it's ready. But there is a tokenized silver product coming to market soon. I guess you could DM me if you're interested in hearing more, so that it's not necessarily shoved everywhere. Shiv says, have you heard of TCU29? I know someone involved in the project, copper-backed crypto. How would you check that it's really linked to copper? Yeah, so there's a few ways. So with digital gold, like Pax Gold, there's one called Oro Gold, and for any digital tokenized anything, what you should always check is their audit logs, and you should always check their serial numbers and how often they're independently audited. So let me try and bring it up. So this is a digital gold product that I know the team, but if you go to, sorry, I've not been on here for a while, maybe it's here. Yeah, so they should have a section like this. So they have audits and security, but it's done by a third party. So this one's done by a company called Cantina. You can go there, you can download the logs, you can see that it's done by a third party. I think there's a way to check the serial numbers, but it's all done automatically on the blockchain. So if you are buying any tokenized product, whether it be stocks, real estate, gold, silver, copper, uranium, whatever it is, and by the way, by the end of 2026, you'll be able to buy anything tokenized. You'll be able to name something that's a real world asset. By the end of 2026, you will be able to buy the tokenized version. But yeah, you just need to check their audit logs, check that it's legit. And ultimately, as long as it matches the price or is transparent with the price, it doesn't really matter, because it's kind of like if you buy anything through a bank and they custody it for you, it's the exact same thing. Shiv says fiat currency seems stable as it's labelled as a pound, but in reality it goes lower in value over time in years. Yeah, 100%. And I think this is the biggest challenge, and this is why gold and silver are such important parts of your portfolio, is that kind of ice cube melting analogy. That is your purchasing power over time. It is the ice cube melting analogy. So if you hold something like gold or silver, you kind of fight against that to a certain extent. And now we've got upside because demand is growing for physical. And no matter what anyone says, the reason we've saw these big moves in the price of gold and silver over the last year, 2 years maybe, is because central banks don't trust each other. There is a lack of trust on the global stage. People don't want a piece of paper that says they own 100 ounces of gold. They want the physical item. Now, that's easy for a central bank, that's easy for a government. For an individual, that is a bit of a problem, because if you hold a large amount of silver physically, liquidating it, selling it, if you need the cash quite quickly, is going to be a real challenge. And then also, what price do you get back? Because as I've just shown, you could buy this silver bar here, this 1 kilogram bar, for $2,000, pounds, £2,138, but you need silver to rise. You need silver to rise another 44% before you go into profit. So, and that's assuming that you keep it, clean, you keep it immaculate. You need a 44% rise off the back of a 100% rise in a year just to see any profit on that silver bar in the UK. And other places are the same. Switzerland, I think France is really expensive, and even places like Dubai that have their own souks and refineries are still really, really expensive compared to spot. Spot's a bit of a fugazi in silver. It's a bit of an illusion. You don't really get spot silver anywhere in the world. And the fact that it's subject to VAT in the UK makes it more expensive as well, which is why, you know, that tokenized silver might be a solution. Alright, so for anyone new to the stream, if you don't know, if you've never been on a stream with us before, we have our own private members community. It's called CC Pro. It's mainly crypto focused, but a lot of finance, a lot of economics in there. Just teaching people basically how to make money. We focus a lot on crypto, but we've got a lot of stuff on stocks. In our alpha section, we've got gold, silver, and like I say, we've been banging on about gold and silver for ages. There's a link in the description. You can sign up. It's a great place to chat about investing, surrounded by like-minded people. We have a move to Dubai section. We've got market updates, a lot of macro recently as well. So even if you're not interested in crypto, it can definitely help you understand the markets a bit better. And new to anyone that's never been on a stream or anyone that has been on a stream, we are now offering one-to-one calls with myself. So we have 30-minute calls and hourly calls. The hour call is more like a strategy call, and the 30-minute call is an Ask Me Anything call. You can book a call to ask me about something in your portfolio, something about your long-term investment plan. You can ask me a question about getting a Dubai visa, or just a general question on the markets. It can be crypto, finance, economics, whatever you want. It's your time, and you can book a call with me. The link is in the description below. And yeah, feel free to book. Ask me whatever you want, and I will help you out as best as we can. 30-minute call, hourly call. The hour call is probably a bit more strategy related. 30-minute call is more about understanding, even if it's how to set up a wallet, how to set up a DCA strategy, something like that. Alright, so I said we would look at where we think silver could get to. So I kind of said at the beginning that I think $100 is more than achievable. I do think we're in the first innings of a bit of a short squeeze. Eric Young actually highlights that. I think he says the silver price from here to $100 will be driven by global industrial physical silver. We've kind of already touched on that, why I think there's massive industrial demand, and that industrial demand is all physical demand, and that means that there's no paper suppressing the price. I think he says that somewhere here. Yeah, he says that here. Global physical silver will unlikely reliquidate at $100. So $100 is probably just a stop position before it goes much, much higher. Let me just see. This is quite interesting as well. It just shows the supply and demand. Supply is being massively outstripped. The one thing you have to factor in with metals is as price rises, supply will start coming faster and faster because it becomes more profitable to go and mine silver. So yeah. If we look, let me do it on the monthly. I think the monthly is probably more accurate. So this is a proper long-term Fib targets. We can see 72 is the 1.618. Let's actually see what gold hit from its Fib target so far. Gold is up at the 3.618 Fibonacci level. If you're not familiar with what Fib levels are, we have done a stream before, but Fib levels are basically everywhere in nature, space, the human body, finances. Fib levels turn up everywhere. But if silver was to do 3.618, which gold has already hit, that would be $148 an ounce. It's almost a 3x from here. That would put market cap around $4.5 trillion for silver. But I think the biggest thing to watch is this ratio here. And I think if we got a break below 63, we could see gold maybe settle off, maybe sub $5,000, and silver absolutely rally and maybe get down to kind of the 50 level before we finally get as low as the 2011 low for the ratio. So big move coming for silver, I believe, but to anyone that thinks it's not possible, gold is now a $30 trillion asset. It added about $10 trillion between August, September and October. Huge move. Silver doesn't even have to do half of that to get to the 3.618. And 4.236, the top extension for gold based on this measured move would be $4,790 an ounce. So perhaps we get there before we find a local top. I think the one thing I would say is be very careful of people calling a top in metals. I've fell for it before, and I thought gold was kind of topping out back in here, I think. And while we did have a bit of a cool off, what gold and silver are basically showing us is that they're not going to stop printing money. They're not going to stop debasing currency. There is no trust amongst central banks, and that means that we're going to see gold and silver continue to rally into 2026. And the fact that the Fed hasn't even begun QE and we're seeing this move in gold tells me that it could go a lot higher as we begin to print dollars. This here is the chart that I think sums it all up. US money supply continuing up higher and higher, all-time high week after week, and that is just going to force gold much higher in the long term. I think, like I said, just to reiterate, I think if you're buying gold or silver, I think be very careful about how much you buy in physical, because liquidating it and selling it's going to be challenging. Also, if you want to move country, it's not as easy to just walk through customs with a few bars of gold under your arm. However, what I would say is it's a long-term investment. It's a 20-year investment for me. It's minimum. It's hand over to kids, hand over to grandkids. That's the way you should look at gold and silver. If you're able to, vault it somewhere, then obviously you can buy a lot more. And for anyone that's interested, I can drop the details of the tokenized silver product that's coming out very soon. But that's all for tonight. I hope all that made sense. I hope that was interesting. I hope you enjoyed that. Something a bit different for the channel. We will be bringing loads more videos like this, featuring specific topics, covering general investment principles, things that can make you money, and some of those price targets for gold and silver I actually think are probably pretty conservative. I think $5,000 plus for gold in the next couple of years is low. I think it will go much higher. Watch out the China and America relationship, because I think that's going to drive price even higher. Thanks for tuning in. Make sure to like the video. Make sure you subscribe to the channel so that you always get notifications when we go live. And I will catch you in CC Pro if you're a member. If not, sign up with the link in the description. Catch you all later.